Again, welcome to Stock Trading Pro. My name is Pete Renzulli. Thank you so much for joining us. Today's episode of Stock Market Live, we have a lot to talk about. If you've been trading actively, especially the last couple of weeks, I am sure that you have, like myself, got a lot more gray hair. I can't tell. A lot more gray hair over the markets the last couple of weeks. The stock market has not been easy, and I'm just going to be straight up with you like that. If you're a regular viewer of the channel, you know I like to keep it real. I talk about what actually is happening in the market, not pie in the sky type stuff. It's been challenging, and we've spent a lot of time discussing, especially in our Discord community, reducing share size, adjusting optimal profit targets, adjusting and being really finite on your entries. But I think one of the biggest things that has made probably the most impactful decisions is tape reading, understanding how to read the tape, understanding reference points, understanding how to find the right price that matters before you get into the trade, to understand whether or not prices are moving closer to or further away from that, which is actually why we're going to talk about some breakout trades. We're going to talk about energy stocks today. We're going to shift over into a group of stocks that we have not really watched for a while, which is agricultural stocks, because a few of them are also breaking out as well. So you have to follow the trail of the smart money, and that's a part of tape reading. So we're going to get into that a little bit today. We're going to talk about crude oil back above $100, how that's affecting the big level that we're watching in the XLE today, the Energy Select ETF that we pay attention to quite a bit. And there's one other group of stocks that we've been watching for a while, actually been talking about them probably for the better part of the last 6 to 8 weeks, have now pulled back into an area that is pretty darn interesting to look for bids in those stocks today, as well as consumer staples today. We're going to get into that as well. So thank you so much for joining me today. We have a ton of stuff to cover. Stick around. I'll be back in just 1 second. Okay, so thank you so much for joining me on today's Stock Market Live, everybody. We're going to talk about, as we do every day, the best stocks to buy now. We're going to do a little bit of sector rotation. We're going to get a little bit into timing entries, talking about some tape reading techniques, which are a big part of trading. You know, again, that's probably two of the biggest things that we do: tape reading and order flow. And it's kind of like 1 and 1A. It's not one or the other. You really need to use both of them. I think that we talked about this morning and yesterday, actually, we had an early meeting yesterday, about the fact that a lot of traders, a lot of smart traders, can figure out which side of the market to be on, but have a really, really hard time at determining whether or not that side has changed. And that applies to both order flow as well as the most recent momentum. So if you could think of tape reading is really building an argument for whether or not you expect the stock to follow through and whether or not you have the right risk profile for that particular moment. And the risk profile is, how much risk do I need to accept and what profit can I justify for that trade? So if you're struggling right now, it's probably that last piece that you're missing, which is the tape reading part of it, which is just adapting to the market conditions and adapting your profit targets and how much risk and position size you're willing to take for that trade. So we're going to get into that in a little bit this morning. I also want to touch on the market itself. The futures markets are actually up again this morning. Let's actually drop it down into the lower time frames. You can see where we closed yesterday, probably a little bit of short covering from yesterday. But I want to talk about this from yesterday morning. This rally that we had off of the CPI yesterday, which we spent a lot of time talking about inflation yesterday, pre-market, obviously in the early video that we did yesterday. And we talked about the best stocks to buy now based on inflation. And we talked about consumer staple stocks, which we're going to get into. We talked about with rising inflation, higher interest rates, technology stocks are most likely to get hit, and they did. NVIDIA stock, if we're going to talk about NVIDIA just very briefly, if we take a look at the daily chart of NVIDIA from yesterday, it actually traded into what's known as a bearish engulfing candlestick, where yesterday's price action completely surrounded the previous candle, bearish gap, bearish engulfing candlestick, but ended up right at support. So we actually had quite a few stocks yesterday that traded down really hard, multiple bearish gaps, including Microsoft yesterday, but stopped right at a level where the last 3 or 4 times buyers stepped right back in and stopped it from going down. So this is the question that a lot of traders have, whether it's buying stocks or short selling stocks, which, by the way, we're seeing a lot of people who are now opening up to the possibility of short selling stocks, using stocks that are going down as a hedge, maybe even buying those inverse ETFs as a hedge. This is the challenge that we have going into today. And NVIDIA is probably one of the best examples of it right here, where it's clearly bearish, but also clearly well beyond the optimal entry. Also, bearish gaps have a big impact on the market, but once, twice, 3, 4, 5, 6, 7, 8 different times, the stock has stopped at that price. So now this is one of those situations where, is it a good buying opportunity because it stopped at that support, or is it simply no longer a good sell short opportunity through that price? That's the challenge that a lot of traders have, and they don't make that final distinction to understand that it needs to get through that price, maybe even pause at that price, which in this case for NVIDIA is right around the 214 level, if you just want to put a little bit of an emphasis on this. So what I'm looking for in NVIDIA right now, despite that giant move to the downside yesterday, which was a bearish engulfing candlestick, I'm looking for it to pause a couple of days, maybe even rally for a day or two before it goes back down through that level. So this is actually, we're going to get into Twitter in a second because we have the same kind of battle going on in Twitter right now. But let's start out with the energy and the XLE. We're going to work our way over there. It doesn't look like anything fantastic other than the fact that we keep getting to this level, right? However, we start to work our way over to the energy futures, crude oil specifically. We have this downtrend that's going on for the better part of a couple of weeks after we hit these levels that we have not seen for a long, long time. And now we actually broke it. So we pushed, we paused, we pushed. We are now rallying pretty cleanly, and we've pretty cleanly taken out this move to the downside. So that, plus looking at a little bit of a bigger picture here in crude oil, in the XLE, you can see that this level has been a really, really significant level, specifically the $80, which is where we're right behind right now. So what I'm looking for here in crude oil and in the XLE, I am looking for a push through this level for maybe a day or two more, and then actually get up to that 100 level. So that basically makes a 20% upside in the XLE. But here's the thing. Remember, tape reading means you need to understand if the trade's still valid. You need to make sure that the trade has still a good argument to it. So for me right now, I'm monitoring the lower time frames actually on crude oil to pay attention to make sure that crude oil is still maintaining that new uptrend. And I just want to put that up on the screen again for you. So we had this big move to the downside. So now I'm actually shifting over, and I am now looking at this move. And we might actually even drop in a little bit longer time frame moving average here, which would be the 50. So now we have this short-term uptrend. We also have the longer-term 50-period moving average now pointing up. As long as this remains valid, and as long as crude oil, the most recent contract, remains above 100, which is that price right there, that's how I'm going to work this chart, and then look for the XLE to get above this $80 level and then make a run towards 100. So you can see that it's been struggling here. If you know basic technical analysis, we're essentially looking at what is called an ascending wedge right now, where you start to make higher lows. You start to punch against a level once, twice, 3 times, 4 times, and eventually it pops through to the upside. So we just built an argument for those stocks and the XLE, and we'll break it down into which stocks I normally trade every day. That's the argument. And that's really one of the biggest parts of trading that a lot of really smart people just don't go that one extra step. You know what they say, the extra mile is never crowded because nobody's willing to do the work to get there. What we just talked about is building out a scenario for the XLE, looking for this ascending wedge on the daily chart to break out to the upside, looking for this reversal in crude oil futures to remain above $100, remain above that uptrend, and remain above the 50-period moving average on the hourly chart, and then look to see if the daily chart can get through that $80 on the XLE and stay there. If it does, that's where I'm going to be looking for that next 20% move in crude oil up to 100 in the XLE. That's the whole trade. I just said if, like 3 or 4 times. If all of that happens, aces. We continue to hang on to the trade. We look for follow through and probably need to be a little bit more patient, because what we just looked at there in that bigger picture was the monthly chart. So you can see on the monthly chart, this is a big level. So really not a surprise, actually, that we keep pausing at this level. But this is interesting to me. The fact that crude has rallied, broke this longer term downtrend for the last 3 weeks, it has me readjusting my trade for this move to the upside. So when you come into our boot camp and I train you how to create game plans like this, where we talk about the stock, the reasons, the market, we break down the stock market power pyramid, we take a look at other stocks within that group, put those into the watch list. All of that is a part of tape reading and building that argument where we're looking for follow through. But here's the key, and this is where really smart traders get into trouble, is you build out that argument and you're like, I did all that hard work. It's in my notebook and I know this is going to be a great trade, right? And if it does, that's fantastic. The challenge is if it does not follow through. And remember, if you're a regular viewer of the channel, you know that everything we talk about is having an edge, which means the edge follows through most of the time, which explicitly means sometimes it doesn't. That's trading in the real world, okay? If all of those things unfold and we remain in that direction, we're going to put on the first piece of a trade looking for the XLE to rally up to that 20% level, which is right around the 100. If it breaks down below, if the futures, crude oil futures break below 100, do not hold that short-term trend, close below that level on the daily chart, then I only have a small piece of the XLE looking for that next move higher. So no harm, no foul, but I have both sides of the trade covered. Because it's a 20% move to the upside, I have no problem scaling into that trade, looking for the next push if XLE could finally make an energy candlestick, no pun intended, above that $80 level and stay there. What I just walked you through is the difference between somebody treating trading like a business versus somebody who is hoping to make money. Every single trade that we discuss in our bootcamp, every single trade that we discuss in our Discord community has that kind of argument built around it. You should never be looking to hit the buy button, the sell short button without really thinking through what are the current conditions, what are the odds of follow through, and this is the tape reading part of it. What does it need to look like to tell me if it's still valid or no longer valid, and what does that mean for my position sizing? What does that mean for how I work that trade? It's not complicated. As a matter of fact, it's pretty easy. You just need a template that says, okay, if this happens, then I plan to do this. If this also happens, then my conviction level is going to be a little bit higher. And just to give you a little bit of a sneak peek into what we do in the bootcamp is essentially put those other stocks from that group into the watch list with the stock you're trading. Because again, order flow now is the second part of that, which is if order flow is going into that group of stocks, that's a pretty good deal. So think about it. If let's compare it to real estate, you have a chance to invest in a property in a neighborhood, and all of the stocks in that neighborhood are getting way bid up, but you can buy the stock at a pretty reasonable price. But all of the houses around it are bought higher than the offer, higher than the offer, higher than the offer. You got a good deal on your hands because more money's flowing into that neighborhood. So we call that neighborhood the groups of stocks. So we talk about the market, sectors, but then within the sectors are the industry groups. And right now we're talking about the group of stocks that make up the XLE. So you just go into FinViz or whatever software you use and grab some other stocks that are heavily weighted in the XLE. And you can look that up under Spider Select and then find some other stocks to add to that. So you'll have conviction. That's the first part of the trade. We want to talk about other ideas today, which we promised, which are breakout strategies today. Okay. So that's the scenario for XLE today. We want to break it down from a sector rotation perspective. We just broke down energy and what we're looking at. We also just talked about technology stocks and consumer cyclical. The last couple of days have been on the downside. So this rotation heading into today, heading into Wednesday, consumer defensive have been strong, and healthcare. I'm going to focus on these two guys right now, but I also want to work our way over into some agricultural stocks. But first, I want to start out with breakouts. One of the big levels that we watch, and if you haven't seen that before, if you happen to not have been in our boot camp, one of the top scans that I teach everybody to run every day are breakouts over very significant levels. 5-day breakouts, 20-day breakouts, 50-day breakouts, and the same thing in the other direction, because you start to get a better feel for the true order flow behind the market based on how many stocks are breaking out of those key levels or breaking down from those key levels. And lately we've been having a lot of stocks that have been breaking down. So for me right now, the best stocks to buy right now in my list are stocks that are showing relative strength to the rest of the market. So I want to give you 4 stocks that are showing that right now. Then we're going to get over into the 2 groups of stocks that have pulled back And now I'm looking for those stocks to head back to the upside. I just want to make sure I say hello. Glenn, good morning. Nice to see you here today. And Minvai, always a pleasure, pal. John A., I love your passion every day. I love your comments in there. Keep that up. And LJ, good morning, buddy. Very happy to see you here. And Simon from across the pond. Good morning, Simon. How are you? Hey, Mark. How's it going? How's it going? Okay, so we're going to break it up. We're going to go over into the group of stocks. Now we're looking at breakout stocks. So these stocks are showing relative strength. So BTU, you can clearly see here. And let's actually zoom out. Again, we want to look in multiple time frames. Has some room to go. Really good push here on the weekly chart. Next, we want to head on over into Ross Stores. And again, you can see a new 20-day breakout. For those of you that like chart patterns, this is an inverse head and shoulders pattern there. So you can see there's a shoulder, there's a head, there's two shoulders here, but the breakout here is 95. So now we've actually, and this is actually an interesting one here. This chart of Ross Stores is clearly a new direction. It broke that inverse head and shoulders to the bottom. It took out new 20-day highs, but it's a little bit beyond the optimal entry. So Ross Store right now would either be what we call a bullish echo for a day trade, or we'd be waiting for it to pause before it makes the next push. So ROST, although it has a 20-day breakout, this is actually what we said at the beginning of today's call, which is tape reading. Tape reading is determining, is it too far from the optimal entry, and what kind of argument can we build if we want to take risk on that trade, which means that argument has to be built out. What's a realistic profit that I could make on this stock after it's already rallied 5 days, I believe. We'll take a look at it, maybe even more than that, and new 20-day breakout. So I want to walk you through that, and we're going to take a look at a couple of other stocks in this same group. So you can see here that on this inverse head and shoulders pattern, which is a bullish pattern to the upside, this stock now, through this breakout from 94, is now up to 102 and change. So it's already $8 beyond the optimal entry. So if $8 is where it's gone, we have to calculate what does it normally do when it moves. And we're looking at 110 to 120. So this stock, ROST, has already gone 80% of what it normally does during a bullish move, but it is also a stock that meets the 20-day breakout, which put it at the top of my list from relative strength. So this is where you get in trouble. You know who I'm talking to. Somebody who loves the idea, can find the trade, pulls it up on a scanner. This stock is strong. It's going. You buy it, goes up one more day, pulls back 3 days, stops you out, and then a week later, it's doing exactly what you thought. Raise your hand if that's you. That definitely happened to me early in my career. It's because I didn't understand tape reading. And by the way, our next boot camp starts next Monday, April 18th. We cover tape reading and all of this in a lot of detail. If you want to at least learn about the boot camp, click the link below the video in the description and you can learn about it. So this is the challenge. The challenge is the stock has now exploded. Clearly a new 20-day high. Even took out this level here, which was a big level. That's where they held the offer down. And now we have some room to go all the way up here into the 114 area. So if we know the stock does normally $10 on an average true move during a bullish move, it's already gone 8. That means for me in ROST, I'm looking for maybe one more day for a day trade, then a pause, then the next swing trade up to that 114 level. So let's actually take that and use what we just talked about other stocks in this industry group. So Ross does a little bit more of the consumer staples area. So that means that we'd also be looking at Dollar Tree, Dollar General, really nice clean pause up here. And stocks like Kohl's. Kohl's had a really big move yesterday, and even stocks like Target. But probably the two bigger stocks in this group that we've been following for quite a while now is Costco. So Costco, you can see, is maintaining this longer-term bullish move. And we can actually redraw this trend line because now it actually has a new level. And right there, it held support. So what I'm actually looking for in Costco today and in Walmart is I am looking for both of them to find a bid to get and start to move back towards higher levels. So it's kind of fun because we started talking about energy stocks being the best stocks to buy now if crude holds over that $100 level. And we built that 20% follow through. But now we're talking back to the inflation conversation where the stronger sector, consumer staples, some of them are rallying and beyond the optimal entry. So maybe a day trade, maybe look for that to pause before the next move. So I just outlined the whole trade for you in ROST. So ROST is a stock I'd consider buying after that pauses, looking for the 114 level. But these other consumer staple stocks have now pulled back, and really the two big dogs, Costco and Walmart, I'm looking for them to rally for the next bullish move higher, which actually takes me over into the next group of stocks that I want to take a look at, which are the healthcare stocks. But first, I want to throw out a question right now, and I want to ask you, do you believe Twitter stock right now is one of the top stocks to buy, or has that story with Elon Musk played itself out, or is it just getting started? We actually spent a lot of time in our game plan call the other day discussing whether Twitter was a buying opportunity after that giant bullish gap up. Let's actually pull the stock up. So TWTR is the bullish idea here. So if we just go based on percentage gains, even just going from this move here, Twitter rallied 68% from middle of March to here. And now if we take that out of there and we hop on over into our handy Fibonacci levels and we start to look at profit potential, let me actually zoom this out just a little bit more so it's easier to see. And we go here from this same move. We now know that we're coming into the 50% retracement level, and that is a big level to be looking to bid for this stock. So we actually have two different trade scenarios now. We have the fact that Twitter traded into what is a bearish U-turn here, which is a bearish momentum candlestick. And then we went well offered. We have 5 days to the downside now, but pulling right into what a lot of people consider an area of support, which is the 50-period moving at the 50-period retracement level. And we actually have some key moving averages that we are above. This one's a mile above it, and the 20 here. So this actually has harmony as far as the opportunities to be bidding here. So what's kind of cool about this is the point that I want to get across here, especially from a tape reading perspective, is that chart and whether or not it's a buying opportunity or a sell short opportunity depends on your perspective and what your objective is. Day traders, we have Nang in our community, who is a very good short-term trader and creates an amazing game plan every day, is looking to be a short seller of Twitter right now based on the fact that the stock on the daily chart continues to make lower highs and lower lows. Swing traders, or people on a little bit bigger perspective, see this as a pullback to what many people consider major support, looking for the opportunity to be a buyer in this stock. So the point that I want to make here, and when you're building arguments for ideas, it's very important to know your objective. So we get a lot of questions about people, well, I'm a day trader versus I'm a swing trader. And that means that you need to be looking at the order flow and reading the tape on the time frames that match your objective. Some people have full-time jobs. As a matter of fact, most people have full-time jobs, and they trade what we call swing trading, which means they're carrying trades overnight. So they have to place their orders prior to the market opening and then put in their stop losses after they get filled, as well as their profit targets, which a lot of people do with bracket orders. So I thought it was kind of interesting to have this discussion about Twitter. There's so much other conversations going on about Elon Musk, and is it going to be a hostile takeover? Is he done with that? He doesn't want to be on the board. All of that is still in the equation, but if you're reading the tape, none of that matters because you just need to pay attention to it based on whether or not you're day trading the stock or swing trading it. So this is kind of an interesting situation. If you want to take a screenshot of that, where you can make an argument on both sides of the idea, pull back for a buying opportunity coming into the 50-period moving average. So if it does push down, we're looking for this 43.50 level to hold as support. But the short-term trade on the hourly time frame, you can see that we're clearly below and looking for short sale opportunities. So it's pretty interesting, isn't it? And I think this is one of the most important things is anybody on this call right now or watching the video, we can't tell somebody else what is the right time frame, but that's what makes trading so amazing. That's what makes trading. You wake up every day and you just can't wait to trade. Probably the one most exciting things you could possibly do in life is neither one of those day trade or swing trade opportunities are right or wrong. They are right for the time frame that you plan to hold the trade, whether it's a day trade or a swing trade. So what I want to challenge you to do every single time before you put the trade on, ask yourself, how long do I plan to hold this trade? Because that's going to influence which order flow matters to you in the context of how you expect it to follow through. Are you holding the trade for an hour as a day trade? Are you holding it for 10 minutes as a day trade? Well, then you're going to go down to today's order flow. Are you holding it for the next move higher, maybe over the next week to 10 days then that means the higher time frame order flow is what matters to you. So it's kind of fun to put the pieces of the market together from an order flow, tape reading, optimal entry, profit target perspective, because there isn't one for everybody. You need to know how long you plan to hold the trade, which is kind of exciting. The one thing I do want to talk about that I think is a major mistake that people do is go into trades not knowing what their objective is and say, now I'm going to turn this into a different trade. That's really just poor planning. And it's poor planning because your objective for the trade needs to influence your position sizing and your risk. So it's very important for you to know what your objective and initial profit target is for the trade well before you hit that buy button, because before you buy a stock, you need to know what you expect it to do. If you have no idea what you expect it to do, then you're just hoping, and that's not a good position to be in. So I want to work my way over into the other group of ideas that we've been talking about recently, and I'm going to head back on over to the daily charts. I'm going to get these guys off of here just to make it a little bit cleaner, and that is the healthcare group of stocks. So the healthcare has been really, really strong. Hopefully you've been paying attention to that with all of us recently. You can see this uptrend is still in really, really good shape. Actually, I want to say hello, Barry. Good morning, Barry. How's it going? So we have a really good, clean pullback. You can see they're opening briefly, right? So I want to work my way over into some of these other stocks that are now pulling back. And you can see yesterday, Johnson & Johnson traded into what we call a bullish U-turn. So if you don't know the language of the bullish U-turn, I'm actually going to pull this up on the screen for you right now. Make sure that you take a snapshot of this because I want you to have it. Let me pull it up over here and here. I just want to make sure that you have this so that you can take a quick screenshot. So this is what a bullish U-turn is. So if you take a look at this right now and then go over to the chart here of J&J, you can see that J&J, yesterday's candle traded below the previous candle, made a U-turn, came back, closed above the open and closed above the previous low. And that is a bullish momentum move back to the upside. So you can see what the U-turn looks like here. And that means that this short-term bearish momentum is now heading back in the other direction. So when we talk about the J&J stock, that is a bullish U-turn where we're looking for opportunities to buy. So J&J and Eli Lilly, both of those had U-turns. Now, Lilly, I would have liked to have seen it trade a little bit higher into that push to the upside. It didn't, but still close enough, okay? So that bullish U-turn is a really big strategy because I want to make a distinction now because now we're talking about reading the tape again a little bit more. You have order flow, which is the big picture buying and selling demand or supply on the market. Then you have tape reading, which is determining how far you are from the optimal entry and determining if the idea is still valid or has it changed. The bullish U-turn is a entry signal, which is the very last thing you do after you determine whether or not something is a good idea. That's also a really big mistake that traders make, is that they first look for the entries when that's the very last piece. That's kind of like you're going, you're on a 50-mile drive and you're constantly trying to make a right-hand turn. That's the wrong sequence. You want to first get there, make sure it's the right place, and then make the turn. So when we talk about the entry signals as the last piece, order flow and tape reading come first. But now here, again, pull up the chart in Lilly and J&J, we now have a reversal back to the upside, looking for new moves in that direction, all based on the bigger picture order flow here. So we covered a whole bunch of stuff here today, starting out with the energy stocks. I do want to walk over into one last group of stocks. We started today talking about looking at stocks that have relative strength to the rest of the market. And I gave you two, BTU and Rostore. I actually want to give you two more in that group. So BTU, relative strength to the market, obviously breaking out here. We talked about Rostore and the distance from the optimal entry. We're also going to talk about EQT with a really clean 20-day breakout. And we're finishing up with Mosaic. Now, Mosaic in the agricultural group is another group of stocks that we want to keep an eye on. So in this same area, CF, FMC, and NTR are the group of stocks in the ag group that we're going to be keeping an eye on. So we talk about breaking down the stock market power pyramid. We start with the market, go up to sectors. And again, this is the sector rotation into today, heading into Wednesday. And you can see how much has changed over the week, where we are getting more and more negative over the last 5 days. We're not seeing as much buying over a day-to-day period, but the overall picture of the month is still strong. That's mostly coming off of the rally that we had after the FOMC announcement. So these stocks here are showing relative strength to the market. So as we said before, if you're looking to trade MOS right now, look other agricultural stocks, put those stocks in your watch list and watch them all together. Going back to that visualization of the real estate deal, are houses in this area also being bought up? Is there a lot of money flowing into this neighborhood? That's the same thing that we look at. We talk about industry groups. And when you have that in play, your confidence and your conviction in the idea should really go up because you're in the right stock at the right time because order flow is flowing into that idea. So we covered a bunch of stuff today. We talked about consumer defensive stocks. We talked about energy stocks. We talked about healthcare stocks, gave you very specific ideas into each of those. Now it's just a question of timing and knowing what time frame your objective is. Are you day trading it or are you swing trading it? That's going to influence your stop loss. So covered a whole bunch of stuff today. I have to head out of here, everybody. I got to get ready for our next game plan meeting. Don't forget, our next boot camp starts next Monday, April 18th. If you want to spend time with me all day where I give you the entries, the exits, and all of this stuff all day, every day in our private community plus coaching, at least click the link below the video and find out what the boot camp's about. I'd love to see you in there. If this is your first time on this channel, please do me a favor, hit that subscribe button and you'll get updates. I'd love to see you back here. And if we found some value today, do me a favor, smash that like button. I really appreciate it. Okay. If you have any follow-up questions to anything we discussed today, or you made some trades that you like to brag about, leave that comment below the video as well. I'd love to hear from you. You'll definitely get a reply from me. Okay. Have an awesome day, everybody. Thank you so much. I really appreciate it.